Taylor. For those of you who don't know me, but I've been coming up here several times a year, so probably most of you are familiar with me. In addition to my newsletter, J. Taylor's Gold, Energy, and Tech Stocks, I also host a radio show that you can hear live on the internet, 12 o'clock p.m., or it's 12 o'clock noon actually, every Tuesday. Or you can catch it the next day as a podcast. My guests next week, this coming Tuesday, Nolan Watson, Dan Oliver, who manages a gold fund, and Michael Oliver, who's a technical analyst, and I'll be talking about Michael Oliver's work a little later in my presentation. I've decided to call this, again, I've started this year in January. I've said, raised the question, is 2018 a year of epic market disruptions? With Trump and a credit cycle that's getting long in the tooth, it seems as though we could be nearing something that the next credit problem, perhaps something significantly worse than 2008, 2009. We hope not, but that's what I think could be in store for us. Now, I decided one of the advantages of getting to be older as I am is that you have a lot more to look at in the rearview mirror. So this event that I think really shaped history, shaped the future in such a major way, occurred about 2 years before my birth. There was a lot of debate within the Truman administration whether dropping the bomb on Japan was necessary. And in fact, Henry Louis Stimson, Secretary of War, didn't think so, raised the question. But we did, and regardless of what the answer to that question is the truth of it, the United States made a statement that it's the United States, it's America's world from here on. There could be no doubt who was in charge. So the year of my birth, here you get a little idea of what things were like back then. The Truman Doctrine, which I think is really important because the military and economic aid would be committed to countries that were opposing communism or any kind of dictatorial behavior on the part of countries as the United States defined that. The Marshall Plan instituted huge amounts of money that flowed overseas to help the war-torn countries get back on their feet. You get a little idea of what the cost of living was at that time. You could buy a house for $12,500, a car $1,400, loaf of bread 10 cents, etc. Gold was $35 an ounce. The budget, the federal deficit was $257 billion, and of course gold was at $35 an ounce. The first president I remember, Dwight David Eisenhower, because I was in grade school then, he was really a peace president, having gone through the horrors of World War II, very much wanted the world to be on a peaceful path. He's the last president that audited the gold standard, or the gold supply in the United States. He very much wanted, as I say, he met with Khrushchev to find ways to resolve differences with Russia. And on his going away, his final speech, he warned about the military-industrial complex, how that could actually take over and dominate policy on the part of the United States. John Kennedy was very much a peace president as well. After the disaster of the Bay of Pigs, there was a CIA plan for a false flag. It was called the Operation Norwoods. Kennedy opposed that. That was to try to get the American people to support the overthrow of the Cuban government. He opposed the expansion of the Vietnam War. He gave some peace speeches. He was very much opposed to secret societies that planned policy without the Americans having knowledge of what was going on. And I can't help but believe his short lifespan might have had something to do with those policies. Richard Nixon, on the other hand, after Johnson, was very much in favor of military expansionism, and he continued the Vietnam War and basically expanded socialism in America on Lyndon Johnson's program, and he started spending money like crazy. But he wasn't going to tax Americans to pay for this, so for all these programs, so we started going into debt. And of course, under Bretton Woods, countries that had dollars could return them for every $35 for an ounce of gold, which France did, and it was a major country that did that. So the U.S. Treasury was running down, was losing its gold very rapidly, and so Nixon put an end to it in 1971 And we went on the floating rate standard that we've had ever since, which has really paved the way for the massive amount of debt and the financial problems that the world is facing today. So it really freed up the United States, to do what it wanted to do militarily, to expand around the world. It allowed the United States to clandestinely overthrow governments that it didn't like. And I would submit to you the last one was the Ukraine government that was voted by the people of the Ukraine, but not suitable to the United States or the military-industrial complex. Of course, that replaced gold was thrown out, and money was fiat money by government command. And so to replace that, though, we put in the petrodollar. And Henry Kissinger went off to Saudi Arabia, arranged for OPEC to demand payment in dollars, and that really allowed the dollar, the petrodollar standard, to replace the gold standard. And that really is, as I say, led to the problems that we have now with major bubbles, financial bubbles all over the place. And I don't have time to talk about this, why I believe it's true, but I believe that that really enabled, really resulted in the destruction of the manufacturing and the mining sector in the United States to a great extent. Middle-class jobs being offshored, sent offshore, and then I think the reason Trump won ultimately is because of that. Just a couple of quick slides to show what happened after 1971. This is the federal debt from $412 billion to approaching $22 trillion now. Both M1 and M2, the growth of the money supply, very dramatic, as you can see, trillions of dollars, especially after 2008. The main problem, and this is total debt, public and private, $60 trillion, but the main problem is the GDP, the yellow line, not growing nearly as rapidly. Obviously, the math doesn't work at some point in time. Showing the dominance of the military budget now, this is discretionary spending, and this was 2015. No doubt it's gobbled up a bigger chunk since Trump came in because he's really spending a lot for military. You can see more than half is military, and the rest are things like, healthcare, education, government, etc., veterans benefits. Now, 2017, this shows what the United States spent on defense compared to the other major spenders for military expenditures. So the United States spent more than all the other major countries combined. Now, it wasn't just military spending. But in fact, I'll just play this in. Let me go back. Let me just make him, before I play this. David Stockman was President Reagan's Office of Management and Budget guy, and he's pictured there at the president's left. I've had David on my radio show several times, and David was making the comparison. In order to get the people to really support military spending instead of social spending or whatever else, you had to have a propaganda machine in place, hence false flags that the CIA tried to do during Kennedy's days. We're doing them, I believe, all the time. And essentially, Reagan, on my show, David Stockman was talking about how all the complaints about Trump's coziness to Russia was really a ploy, a propaganda, if you will, to get America to spend more on military. And indeed, Trump, the only place he really got any joy from anybody after he became president, especially among the militaristic Republicans, was after he dropped some bombs on Syria and started to express, because during his campaign he was very much against expansionism, and I think he wanted to be, but I think he knew that he better not be. So anyway, here's what David Stockman had to say.
You have just an enormous groupthink here. Yes. That's incredible to behold. It does function basically to the advantage of the deep state, the military-industrial surveillance complex. Mm-hmm. And what I wrote in this article, which you just mentioned, and I don't like to beat my own drums here, but it's well worth going into, because I not only exposed the sham of this indictment and the fact that, these are 20-something-year-old unemployed people in St. Petersburg who were hired crank away on keyboards 12 hours at a time, sending out nonsense messages. But the thing is, the Democrats now have seized on that because they've been beside themselves trying to explain how the worst candidate in history of a major party, Donald Trump, beat their candidate, okay? And so they've now gone off the deep end with this hysteria about Russian meddling because they're trying to explain the inexplicable, but that is really worrisome and dangerous because it means a carte blanche check for the military-industrial complex in dollars in the budget and in running room on policy. And so the one thing that I was hoping Trump could do, which was to go to Geneva, meet with Putin, and have a rapprochement and say, we'll stay out of your neighborhood in the Ukraine if you stay out of Mexico, which I'm sure he would agree to. And Syria is none of our business, and if the government there wants you to help them stabilize the place and get rid of the radical jihadists, more power to you.
Sure.
It would have changed the world, but my point is, we're going broke. That $1.2 trillion of debt that I mentioned for the coming year is not happening at the bottom of a business cycle, downturn. It is happening 10 years into a recovery.
Incredible.
Which is, 6% of GDP. It's incredible. And sometimes when you've had the long experience that some people have had, I've had. I was sitting there in early 1982 when we were in a deep recession. The deficit soared out of control, inadvertently, because, the tax cut was too big, the defense increase got out of hand. But we were facing, at the bottom of a recession, a 6% of GDP deficit, and we were terrified.
Yeah, at the bottom.
At the bottom. Now, here they are at the top, 10 years in, 104 months in, and they're consciously, intentionally widening the deficit to 6% of GDP, and that's insane, because a year or 2 or 3 years down the road we're going to get a recession, and then the revenue will dry up and the thing will soar beyond management. So, this is dangerous, but here's the reason, and that is the Republicans are afraid to take on entitlements because they'll get demagogued by the Democrats.
Right.
The Democrats were afraid to really throw their bodies in front of this tax bill because they thought, it would be popular to give away, to lower taxes. And so they did nothing. And then both sides get together and say, if you want to raise defense by $80 billion a year, the Democrats said that's fine with us, but we got to raise domestic spending by $70 billion. Okay, so you now have no constituency for fiscal rectitude. None.
Exactly.
It's gone.
Yeah.
And the only small force we had in Congress, the Freedom Caucus in the House, they ended up in this deal they made to avoid the shutdown a couple of weeks ago. I said in one of the blogs I wrote, they took him out behind the Capitol and shot him dead politically, okay? Because that's really what the Republican leadership, McConnell in the Senate and Ryan, who I think is the greatest fiscal flake to come down the pike in a long time, did in the House. And so now you have this fiscal situation at this late stage in the business cycle, running out of control, at the same time that you have a posse of Keynesians in the Eccles building trying to reload their dry powder by shrinking the balance sheet and driving bond yields straight up.
All right,
it's a recipe. It's a recipe for a conflagration like we haven't seen.
All right, I think that David Stockman really sort of sums it up there, the position that we're in now financially and why we have to really be careful and why we have to be concerned and be ready for some very unstable times. But Donald Trump, he raised the military spending very dramatically from a negative growth during the last year of Obama, about $158 billion a year more. He gets joy for doing that. He gets a little growth in the economy. It certainly helped. And Herbert Stein, or Martin Feldstein, I should say, who is a professor at Harvard, has really warned about this. We've relied on the kindness of strangers for so long. And now China and Russia and some of these countries are saying no more. Russia sold all of their debt. China is not buying new treasuries, they're unwinding. And there's just, at these low rates, so Feldstein is saying we're going to have to raise about $6 trillion from foreigners in the years to come, and we're going to have much higher interest rates. And indeed, these are rollovers of treasuries showing the incredible increase since the financial crisis in terms of these are the amount of money that we have to roll over during this time frame since the financial crisis and what it's costing us with each rollover. But we've barely even begun to see the increase in interest rates. Here's the federal funds rate just recently. This chart shows on the left side is the federal debt. On the right side shows the interest rate increase, even though interest rates have barely started to rise. And now, whereas back in 1971, $3.7 billion would have been added to the budget deficit or to the budget to government spending, now it's $212 billion for a 1% rise in the interest rates. So can we rely on the kindness of strangers? The Chinese, the Russians, the various people are fighting back. They're setting up, since 2008 especially, and they're setting up their own system, their own SWIFT system to try to get around the United States, sanctions and so forth. China is setting up this Shanghai Free Trade Zone that allows the establishment of the petro-yuan to compete with the petrodollar. The Indian government started buying weapons from Russia in rubles, not in dollars. This is a common thread. These countries are trading amongst themselves no longer in dollars. So the question is, how high do interest rates have to go to get Americans to finance the debt and stop living beyond their means? And the question is, how will the Fed handle it? Will they start printing money like mad to accommodate in the absence of foreigners financing our debt? This shows the trend in foreign bank gold holdings since 2008. This is central banks of foreign bank, not the United States, but China. Here's China. This is the yellow part is the amount that China is mining, and the red part is what they've taken in through Hong Kong, the amount of imports into Russia from Hong Kong. Here's Russia's increase in gold since 2008. China and India combined here. This shows the enormous amount of demand for gold that's going into those countries in recent years since 2008. And now,
are you kidding me? The United States is going to start sanctioning our allies and their banks and their businesses because we walked away from a deal, and we're going to force them to do what we want them to do even though they agreed to the deal we came to? Are you kidding? That is a recipe quickly, my friends, for them to walk away from Ukraine, where they are already very dicey and ready to say, well, we've done our bit. They were ready, in many cases, to say, well, we're the ones paying the price for your sanctions. It was Obama who went out and actually put together a sanctions regime that had an impact. I went to China. We persuaded China, don't buy more oil. We persuaded India and other countries to step back. Can you imagine trying to sanction them after persuading them to put in place sanctions to bring Iran to the negotiating table? And when they have not only come to the table, but they made a deal, we turn around and nix the deal and then tell them you're going to have to obey our rules on the sanctions anyway. That is a recipe very quickly, my friends, business people here, for the American dollar to cease to be the reserve currency of the world, which is already bubbling out there.
Okay, so it's not just China and Russia. It's a lot of European countries that are getting fed up with the United States because we asked the Europeans to give up so much in trade with Iran. And then this was Secretary of State Kerry suggesting that if the neocons, if the war hawks among the Republicans and the Democrats tried to roll back Obama's agreement with Iran, you'd have a lot of anger from Europeans. And indeed, that's what happened about a month ago at the UN. Germany and France and the bigger countries in Europe got together with Russia, Iran, China to find ways around the sanctions. that the United States was going to impose on them. So what I'm saying is the U.S. is running into trouble globally, I think, and this is something you need to be very much aware of in terms of your investments going forward. I digress a little bit with this slide, and probably shouldn't because I'm going to be out of time very shortly, but the black line here, if you had bought gold at the AM fix and sold it at the PM fix back when gold was $35 an ounce, it would now be worth about $2.50 or $3. On the other hand, if you had done the opposite, bought the PM fix and sold the next morning on the AM fix, that blue line at the top would be your result, and it would be worth something like $12,000 right now. The red line is what the actual price of gold is now, the paper market price of gold. I just ask you to ponder that. Give me some reason why that could be true if we have free markets for the gold price. Now, I'm going to just introduce you to Michael Oliver, and I'm going to run over my time just for a couple of minutes here. I have him on my radio show almost every week, and he's very helpful to me as an investor as opposed to a trader. I look at Jordan's work, and I think he's great if you're going to be in and out of the markets, but Michael keeps me in the market until it's time to get out for major moves. And I'm going to just play a couple of his audios that he provided here. He was very good in 2011 getting people out using his structural momentum technology, his proprietary means. And so this shows what he did. He got out nice and early in 2011, not exactly at the exact top, but a lot earlier.
We want to show you some charts of how MSA does its analysis, which is quite different from just looking at simple price charts. Let's take a tour through some old gold charts up to the present, and also then we're going to turn to the GDX. Here we have a monthly price chart of gold on the left going back from 2008 through 2015 collapse. And we see the topping process in 2011 and 12, where price more or less hung around up there between mid-1500s to 1800, going up and down, confusing people. Meanwhile, momentum, which had been totally synchronized with price bull trend up through 2011, actually broke its momentum trend structure, the kind of line you draw on a price chart, but we draw it on momentum. It broke the 3-year average oscillator structure in January and February of 2017. Price then was above 1700, looking comfortable, but momentum said, no, you're broken. It took price until April of 2013 to finally break down and convince people who were looking at price charts that it was over. Price then broke through the lows of 2011 and the mid-2012 low, when in April of 2013 it hit 1520. Collapse followed. Now, I suggest that probably most investors would like to have been out of gold in 1700 price level in early 2012, rather than selling in a panic in the April collapse at 1520.
All right, I'm going to have to skip over a couple of the other slides that he gave. The next one shows when he got back into gold in 2016, and I can tell you that Jordan would have had me in and out of gold several times. Michael's kept me in gold, not trading in and out. And for me as an investor, that's very important. I just have to skip these because I'm running out of time, and maybe I can provide them to you on my own website, because I think he does very valuable work. It's Oliver MSA if you'd like to check him out. Mark Brown is going to talk to us about Avrupa Minerals. It's prospect generator.